Hi, Sam. Welcome to the pod.
Thanks for having us, man. Good to be here.
Awesome. Awesome. Cool. So, your business is a very niche business, but has a lot of potential, and there's a clear need for that in the industry. It's an event management tool, SaaS business for the equestrian industry. So, horse riding and the various different disciplines, I guess. But why don't you give us a bit of an introduction about it and maybe your journey into that business as well?
Sure thing. So, Pegasus is the name of the company. We're based out of Austin, Texas, and we are a group of founders who have built and exited companies before that have decided that our next project is going to be how do we build ultimately the global operating system for the equestrian economy. So that basically means how do we build software that if you are buying horses, selling horses, renting barns, participating in horse shows, buying insurance, buying products, all that sort of stuff, how do you maintain your equestrian lifestyle and career, basically doing all of that on one software platform? And us as a company, in return for providing all that infrastructure, we will take a transaction fee on all transactions that go through the platform. So if you zoom out, the global equestrian industry is about a $230 billion industry. And our goal is to ultimately take a transaction fee on all those transactions that go through that $230 billion. So that's kind of like the pie in the sky moonshot goal of the company. As for what it is right now, we are an event management system. So we're starting off with the software you use to search for horse shows, register for horse shows, sign your liability paperwork, pay your entry fees, accept refunds if you need a refund. And then for the show management, so the people running the horse shows, for their ability to post an event, run an event, accept registrations, track signatures of paperwork, make sure everyone's paid, refund people if they have to, score people's performance in real time, live push notifications if the schedules change, push notifications if the results are published. And then beyond that, everything from selling spectator tickets to selling sponsorship deals, vendors on site like food trucks and all that sort of stuff. And then the third component is essentially for the brands, all the brands that want to sponsor all the horse shows. They can basically search all the events on the platform, and they can basically pay the event organizers to sponsor the horse shows through the platform.
So the first step is more like a B2B platform, right? Where it's the event organizers who pay you a subscription fee, right? But the long-term goal is to basically have a B2B stream and also B2C stream where maybe athletes or whatever practitioners in the industry also pay for the app, or will it be always B2B?
So think of it more as a marketplace, a multi-vendor marketplace. So the goal of the company is to essentially have a profile of a vertically integrated SaaS platform, but really think of it more like a marketplace. If you're looking at it from a financial perspective, it's more of a multi-vendor marketplace. So us as a company, we provide the software, which is the market, and then the different event organizers, they create their businesses and they run their events on top of our platform. And then they sell their services to the people who compete in the events. And then when they transfer their earnings from the event to their bank account at the end of the show, we take our 5%. So it's more of a multi-vendor marketplace model. Now, going forward into the future, if we vertically integrate the market and, we add extra things such as boarding fees and horse sales and all that sort of stuff, at that point, then we might switch into a more recognizable model that is a B2B SaaS model, because you might have like the riders, for example, might have an annual or monthly Pegasus subscription, and that subscription gives them access to, wider data about the horses that they're looking to buy and sell, for example, so they can make an informed decision. Or if they want to have access to videos from their rides, then, if you have a free account, then you don't have access to the premium videos. If you're a paid subscriber, you have access to the free videos. So that's all down the road, and we're not there yet. But the goal right now, it's a multi-vendor marketplace, but going forward, we could see it turning into a more B2B SaaS model as the
Got it.
product suite grows.
Makes sense. Makes sense. So if I mean, the I guess the business you exited before, with you with me, it was a
Hard
HR
name to say.
SaaS.
Hard.
Say
As I
again.
people are like, with you, with me, I'm like, yep, it's a hard name to say. But once,
Yeah, exactly. I was like,
but
saying
once you figure
yeah.
out how to say it, it's hard to forget.
With you with me, yeah. So that was an HR SaaS business, right? And then I guess, like, how did you make the transition from that into what you're doing now? Like, what was the journey?
Oh, very simply. Pretty much every guy who works in the equestrian industry who doesn't have a background in horses met a girl who rides, and then they became involved in the equestrian space. That's pretty much how we all get involved. Um, that's the long and the short of it. But the full length story is that at the start of COVID, I was then newly dating my now fiance and co-founder Jen. And I just exited my previous company, which was, as I said, the HR SaaS company / defense contracting company. And Jen, at that time, she was working for a large tech company, and she was a sales tech executive. And her job up until that point was primarily going around to conferences at the local municipal government level to basically sell them this software that was for parking. Now, when COVID hit, because the conferences were no longer taking place, like, she couldn't go anywhere and therefore had a lot of spare time on her hands. Even though she was still employed, she had a lot of time on her hands. And I had nothing to do because I had just exited and I was trying to figure out what to do. So Jen, who's a lifelong equestrian, she said to me, she's like, well, you know how to build tech companies and you have nothing to do. And I've got time. The equestrian industry, my love, is drastically available for disruption. Like, let's go build a tech company in the equestrian space. So we that was how it started. And then we were dating, so it comes to the trials and tribulations of dating your co-founder and stress and all that sort of stuff. But from there, we decided to build first what was a Facebook / Airbnb for the equestrian industry. And I built all that myself. And then when it was built, we were building that. People kept coming to us, riders kept saying to us, like, hey, this is all great, but what would be great was if you could integrate into this the ability to find all the events, because horse shows, and you post them. It's in a Facebook group that you might not be a member of, or it's on an old WordPress website that you don't know about. And so riders were constantly finding out about events that they wanted to participate in after the event had taken place. And so it was that when we had the light bulb moment. We were like, oh, okay. So building the software that gets all the events in one place so that everyone can see the industry, that's kind of like the key thing we should be building. So that's why we decided to build an event management system.
Got it. That's a first step. Yeah, makes sense. And so, if it's not too confidential, like, what is the revenue right now, or the amount of users, and how do you kind of go about, revenue growth and
Yeah.
go to
I
market?
mean, it's not confidential because we've only just launched. So we spent 2 years building the software. And it's funny, like, we're based in Austin, Texas, right? We're surrounded, and we're in Hampton. We're surrounded by a lot of very successful technical professionals or who have built software before. 2 years is a long time to build an MVP. Like, it shouldn't take you that long. And don't get me wrong, we took some wrong turns along the way as we, got things right and got things wrong. But the fact of the matter is like, horse show software is a lot more complicated to build than you'd expect. It's complicated because you've got everything from dealing with legal minors and their data. You've got paperwork that everyone must sign when participating in a horse show. And it's not just like, I'm registering, I need to sign paperwork. It's like, I'm registering, and these 3 other people who are associated with my horse, they need to sign paperwork as well, even though they're not coming. So how do you build workflows that make it easy to get paperwork from people who aren't really engaged and don't really want to spend the time and effort? And how do you do it in a way that it doesn't stop the registration in its tracks until you get all the signatures. And then in equestrian sports, while equestrian sports is like one word or two words, it's 54 different sports. So while 80% of the features might be the same for all 54, 20% is different. And you can't half run an event. Like if you don't have the scoring set up exactly how they need the scoring, they can't use your software. So it took us a while to build it. But we're finally there, and we just launched about 4 or 5 weeks ago, and we've just finished running our first horse shows. And anyone who's built software before and launched it will know that like you inherently discover a shit ton of bugs when you start dealing with customers. And so like you've got this idea of like, okay, we're going to launch it, and then the next quarter we're going to release this feature, and this feature. But really you spend the first 3 months fixing all the shit that was supposed to be finished already, and you're just like fixing all the bugs and trying to like put down the railway tracks in front of the train as it's coming along, just to make sure that like the few customers you have onboarded can actually use it properly. As they discover amazingly wacky ways to break something that you thought couldn't be broken. So we've just run our first few launch shows. We've gone through that first quarter of fixing like the bugs to basically do it. And so we're right now at the point where we are like drastically scaling our outreach to horse show organizers, convincing them to start using the platform, confident that they will actually be able to use it. So, so what that basically means is that our revenue is only in the few $1,000s because we've only run a couple of horse shows. But we're expecting that over the next 6 months, that'll drastically increase. And, you know, hopefully create a very successful business.
Amazing. And I guess the go-to market is because of your fiance and, you know, her being, I guess, really well connected in the industry. She can just reach out to a lot of her contacts and then basically ask them to, I don't know, like book a demo or just register initially, right? And you just like upload the data or something, whatever you need to you know, to have it on the platform, basically, right?
Yeah. So the go-to-market, you know, like every startup, you know, if you're listening to this and you haven't done this before, you haven't built a startup and stuff, every single startup out there with a really glossy website and a beautiful Instagram account, it looks like everyone's got their shit together and everyone's got a perfect plan and they're executing it exactly as expected. The reality is the 9% of startups, like every week, it's like, well, what can we try this week? What's working? What's not working? Like it's always like you try something, it doesn't work. And then you've got to decide, is it not working because I haven't given it enough time? Or is it actually just not working? And you've got to make those decisions. So for us, what we essentially did was, because we were building the software, right, and we couldn't actually onboard customers, what we did was that for those 2 years while we were building it, Jen, my co-founder, who's head of marketing, she did a really excellent job of building a marketing engine to basically already start building the brand. So we did everything from, we have a really good Instagram. We have, I mean, I'm biased. I think we have the best Instagram account in our entire industry as far as like quality of content, like in terms of like its visual quality, as well as like what it's actually talking about and doing and the consistency of it. And then building a follower base on Instagram to basically build brand recognition in the market before we even launched. We also have a podcast, which we were talking about earlier, but we have a podcast on the equestrian space, and that's kind of like a thought leadership podcast that allows people who are, it attracts the people who actually want to solve the problems in the industry. So, you know, for every 100 customers we talk to, you know, 90 of them will complain about the status quo, but do they actually want to get off their ass and fix it? Not really. Like they'll complain, but they can't be bothered, or it's not important to them enough. But 10 in 100 are actually like, no, like I want to fix this, and how can I help, and what can I do? So our podcast is a thought leadership podcast in a space that doesn't really have thought leadership, to try and attract those A players to our cause and to our mission, so that now that we are launching, we reach back out to them and they're like, yep, I'm ready. How can I help? Who can I introduce you to? And it also, as we discussed earlier, like it gives us the opportunity to invite onto our podcast key decision makers in the industry who have the authority to buy our product or have the authority to force someone else to use our product, to basically come on, become friends of the company, understand what we're doing, believe in us, support in us. So for us, our goal as a company is to become the global operating system for the equestrian economy. And therefore, we will succeed far greater if the businesses grow and scale that exist in the economy. So our podcast is more about how can we get these small business-minded equestrians to start thinking like entrepreneurs. And in order to think like entrepreneurs, if you think about what that actually requires, it requires that you think about the bigger picture. Like you understand the bigger picture. You understand what are the macroeconomic trends? What are the macro socio-cultural trends? Like this market is doing this. Like, for example, a perfect example in the equestrian industry is that over the last 10 years, the Asian markets have come online for equestrian sports. And so, and the Asian culture is very much like they want to buy Western brands because it's a status symbol. So for equestrians in America to be like, oh, the Asian market is a possible market that I can sell to. I can sell apparel. I can sell online training services. I can sell horses, whatever it is. That way they can start to think about, okay, maybe I should raise capital to scale this out and take advantage of this opportunity. Maybe I should bring in some business partners. Maybe I should build an online course and then take some marketing training so I can market it to the Asian markets, etc. But in order to think about all of that, they need to understand the concept of like an Asian market and that it's coming online and that it's available. Right. So our podcast is exclusively focused on business trends, entrepreneurial stuff, like what is the politics of the industry, what are the markets doing, how are they changing, all that sort of stuff. Okay. Just so for equestrians who listen to it can be like, oh, okay, now I'm starting to like understand how this whole thing works, and now I can position myself to take advantage of it.
Yeah, amazing. Yeah, that's like a great account-based marketing strategy as well, right? You can just go after certain people you find really interesting, right, and then basically get them on the pod, and then tell them about your product.
And then that's the other thing too. It's a great excuse to befriend key decision makers in the industry and make them customers or make them allies and recruit them to the cause and all that sort of stuff.
Yeah. Awesome. Yeah, I mean, to be honest, we started the SaaS Minds podcast, early January, and we had, I guess, almost every week since then an episode come out. And the reason is to position us as this SaaS kind of thought leaders. And it really works. And also, of course, I get to talk to really interesting people. But podcasts are, even 2 years ago, people were like, look, if you haven't started a podcast, it's too late. And then now people are like, if you haven't started a podcast, it's too late. But it's not too late, right? It's like the industry is still growing. People have more free time. They spend less, more and more time, it's free time. And so, you just binge podcasts these days.
And also, too late assumes that you can't break in. Like if you create good content and it resonates with people, then you will succeed. I mean, it's that simple. I mean, at the end of the day, I have my podcast that I listen to, but I would go outside of it if I found a new one. And if I found a new one and that new one was great, then I would just every time I go to my podcast, I would start listening to that one. I don't have an allegiance to the old ones that I feel like it's not like I've got invested infrastructure or stock in the existing podcast that makes it more than just a listening choice.
Yeah. What's the podcast?
I've got a few. So my main rotation is basically a reflection of my interests. So as far as business is concerned, I would say the two ones I listen to routinely is actually four that I listen to routinely is the All In podcast, My First Million podcast. I think My First Million podcast is pound for pound. I get more value out of that than any podcast I listen to. I think it's just like has the it's so potent in how many tangible things come out of it every single episode. Um, and then I also listen to the Tech Meme Ride Home podcast, which is there's a website that's quite well known in Silicon Valley called Tech Meme, right? Tech Meme, and it's basically just like it's like a rolling update of news headlines in Silicon Valley, right? And then there's a guy who does a Tech Meme Ride Home podcast, and essentially every day he releases a half-hour podcast of what's the latest news in Silicon Valley. So like what's happened, what deals are happening, who did a product release, blah, 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 blah. So it's a great way just to like stay in touch with like what's happening. And then there's actually a podcast called, now it's called T-Boy, T-B-O-Y. It used to be the Robin Hood Snacks podcast. So the story is these two guys out in New York who were both Wall Street banker analysts who just hated the banking life, created a podcast called Snacks, where they basically just went through the financial news and then, but like, you know, made for millennials and Generation Z. And then they got acquired by Robinhood, the company, and they became Robinhood Snacks, and it was basically Robinhood's marketing strategy. And then I think that contract ended, so they've now gone out and they've created T-Boy, which is basically what Snacks was originally. And it's just these two guys who just like, it's a bit douchey, like it's a bit like annoying. The first time you listen to it, you're like, this is like kind of annoying, and it's a bit douchey and a bit tongue in cheek. But it goes, they give really good, quick daily summaries of the biggest like financial news stories. And what you'll find is if you listen to the Tech Meme Ride Home podcast, which talks about tech and what's happening, and you listen to the T-Boy podcast, one of them breaks down like, this is what's happening, this is the tech, this is why it's important. And then the other one often has like one or two of the same stories on the same day. And it's like, and this is why it matters financially. And this is this is how the funds, this is how the market's responding to it. This is how they're trading on it. So if you keep the two in sync, you can get a pretty rounded picture of like what's happening in the news in the tech world.
Cool. Amazing. I mean, for me, all in is that like, you know, weekly routine.
I think everyone who works out, every like dude I know who works out, like puts on the All In podcast on their Saturday morning workout, and that's like their thing.
Yeah. And then I really enjoy
Yep.
The podcast, right? It's like once a month now. And then from time to time, I listen to
Founders is good.
You know, the guy who talks about founder stories, right? Like, and then, you know, my kind of podcast strategy, like I check it out. Like, I mean, definitely my first million is good, but I haven't actually listened to that for a while. But I need to actually, you know, restart. But the other way I use podcasts is almost like if I want to get smart on a certain topic, I just binge listen to, I don't know, like 10 episodes in one podcast, or like, you know, even more, to just really get, like, for example, when I was like thinking about the SaaS Minds podcast or like SaaS podcast, like I just listened for like 2-3 months to like all the SaaS podcasts out there to understand, you know, different angles and different stories.
Yeah, absolutely.
Awesome.
Yeah, and then beyond just like tech and business, I listen to a lot of geopolitics podcasts. So my background before Pegasus was in national security and the intelligence community. So I listen to a lot of podcasts with on like, you know, world affairs and foreign policy and geopolitics and all that sort of stuff. And I listen to a lot of podcasts about CrossFit. Like the CrossFit as a sport, it's like the one sport that I like diehard follow, which is most people would consider pretty sad. But the thing, I mean, I know like we're not into the podcast now, but like the thing I find fascinating about CrossFit is if you get into the ecosystem of the sport and you like really absorb it, it's a really incredible case study of how a company created a brand that stands for more than what the company sells, and then the media ecosystem that was spurred from that, and how the media ecosystem is like self-sufficient and sells the brand's product for them without the brand having to invest money in marketing. It's so like, and so I find it, and because we're in the equestrian sports, and as someone who's come to equestrian sports, like when I started the company, I wasn't a rider. My co-founder is a lifelong rider, but I'm not. I've had to like, I spent a lot of time studying other sports and being like, what do they do that's really successful that we can steal and bring into the equestrian space? And then like, why does it work there? And is the reason it works there, would that also work here? Or are equestrians so different that like, that's a lost cause, like try and ignore that part. So so I get to entertain
So
my
let me ask
passion of
you.
like keeping up to date with like CrossFit
No, that's good.
and the athletes, as well as like learn things for the business.
Yeah, let me ask you one other question, and then we jump into your business. But High Rocks, right? Taking so much market share, I think. Why is High Rocks growing so fast now? Because obviously it has a lot of elements from CrossFit, but it's maybe more towards people who also like to basically run for a kilometer, right? And between sets. Why do you think they're so successful?
So I would say that my belief is that High Rocks won't actually succeed. I think
Okay.
High Rocks
It's
will
more
fail
fad, you think?
in the long run, and I think the reason it's succeeding is one, because it's okay. Sports are infamous for fads, right? Like Tough Mudder popped up, everyone was doing Tough Mudders. Now no one does Tough Mudders. Spartan Race popped up, and they develop these micro communities where you have the few people who become like micro celebrities in the sport, and then they kind of disappear. And I think High Rocks is going to be an example of that. I think it is currently, it is flashy, it's new, it's branded like Equinox, it's designed to look sexy. The people who do it all kind of like, they make them look good, they create good YouTube content, and it's new. So I think people are excited about it. The reason I don't think it will succeed is the reason CrossFit is as successful as it is, and CrossFit is declining, it's not still going up, right? Is because the business isn't High Rocks competitions, etc. The business is, we are a gym chain and we have local gyms in local communities, and people in local gyms, they participate in this. They love it, they get community, it's great. And now the sport resonates with me because I've done a workout very similar to what that professional athlete's doing. And I know how fucking hard it is, that to watch that person do it at the weights they're doing it, at the speed they're doing it, blows my mind. Like, it's incomprehensible, like how a human can get to that capacity. And so CrossFit has kind of this built-in interest and fan base that comes from the local gyms that watch the sport. And that gives it staying power so that it doesn't just become something that's exciting and then disappear. Whereas High Rocks is very much like, its business is the competitions. And so while that's cool and sexy right now, without the foundation of the gyms that build in an audience that's like committed, resonates, consistently interested, consistently recruiting at the grass levels, like I think High Rocks is probably like massively private equity backed, right? So they've got to go out, they've got to spend the money on the marketing, they've got to like get people to attend every event, and every event must be better than the last event, otherwise like it's not working. Whereas CrossFit, like they make money out of selling the license to the gym, and then the gym at the grassroots level, they go recruit the people and they find the people and they put all the effort in themselves, and then that creates the audience that support the actual sport. So I think High Rocks will fail. I mean, it might take 5 years and it'll be really, really cool.
Yeah, Tough Mudder was
Yeah.
like 5 or 10 years, right? But yeah, it's a good point. It's a good point. And to be honest, yeah, this whole community and grassroots angle with CrossFit is, that's like so important. And I think a lot of my friends who do CrossFit, they actually never did any other sport
Really?
in their life. and CrossFit gives them that community to actually do some sort of sport, which then, tends to be, the various combinations in CrossFit, right? Which is like huge, because it just attracts so many more people, right? It doesn't only attract like elite. In fact, it probably doesn't attract too much.
Yeah, on our, because I mean, I've obviously spent a lot of time thinking about this. But the other thing too about sports is that sports fall into one of two categories. They're either sports that are exciting because the action is exciting, or they're sports that are exciting because you care about the athletes. So take CrossFit, for example. I love watching CrossFit competitions. Like, I mark it on the calendar. Let me just turn this off. These reactions off. I mark it on the calendar. Like, I say to my fiance, I'm like, don't bother me this weekend. The CrossFit games are on. Like, that's what I'm doing. That's my priority, right? But I'm the first to admit, if I go watch a live CrossFit competition, it's boring as fuck. It is so dull, because at the end of the day, you're just watching people lift weights like in a room, right? So the reason it's interesting is not because the sport is exciting. The reason it's interesting is because there's so many YouTubers out there and Instagram accounts, and CrossFit as a company spends so much time and energy in building these documentaries about the athletes, about the games, about the competitions, that one, they take what's boring in reality and they cut it into a highly entertaining movie that makes it entertaining. And two, you start to follow the lives of the athletes, and you start to understand, like, this athlete's good at that and that athlete's bad at that. And therefore, when they get to this event, maybe this guy should win because he has an edge and this guy should lose. But over the course of 10 events, who's going to average out to be the best? So you care because of the athletes. Whereas if you take American football, for example, most people care because of the action. Like, you care about the action on the field. You don't, I mean, some people know the characters. A lot of people don't know the characters, but they just know, I like my team versus your team, and I want to get to the championship at the end, and I watch it because of the action. And so depending on the sports, you've got to understand, if you're running a sport as a business, you've got to understand which one are you, and your marketing has to be tailored to, like, fostering whichever is your strength. And that's what CrossFit's excellent at. As a company, and the more I started, like, I went as far as reaching out to the guy who was their very first head of marketing. And I was like, did you guys do this on purpose? And he was like, no, it was a happy accident. But the way they kind of did it was they created a gym chain. They then gave licenses to local gyms to run it. They then decided to host the CrossFit Games. The games became like the global competition each year. The CrossFit Games created celebrities. The celebrities then were interesting enough that YouTubers wanted to create, they created the games. The games then they created documentaries about the games. The documentaries created celebrities. The celebrities then needed to figure out how to make more money so they could work full time on getting better at the competition. So then they started doing brand deals, and then the YouTubers followed the brand deals and the celebrities, and it ultimately got to the point that CrossFit as a company completely shut down its marketing team because it didn't need it anymore, because the YouTube ecosystem had become so self-sufficient and did all the marketing for them that they didn't need to pay for that anymore, and they just outsourced the entire thing to the public, and it just ran itself. And that, to this day, that's what's happening. Like, CrossFit HQ does a little bit of marketing. It's pretty shit, but everyone continues to absorb the organic stuff created by the YouTubers who are making their own businesses off their own audiences and all that sort of stuff. So it's quite a remarkable case study on how to take what is essentially just a gym chain and make it this whole other thing. So that's the podcast. We achieve the same thing with a newsletter that we've been writing. So we release a newsletter every week, and that newsletter has everything that we're doing and the thought leadership and all that sort of stuff. I post on LinkedIn like a few times a week, like thought leadership about the industry. And then the final thing beyond that is that for the first 2 years of the company, Jen and I spent 2 years driving around America, staying in Airbnbs and meeting with all the key stakeholders in the industry to basically understand their pain points, understand their risks, understand their financial incentives, understand their politics with other people in the industry,
Mm-hmm.
so that we could build the right thing, but also that, and maintain communications with them, also get them to, like, when we're ready to actually onboard them as customers, they've met us, they know who we are, they believe in us, they like us, etc. So that's all a very long-winded way of saying that while the tech was being built and we as non-technical people couldn't do much
Mm-hmm.
else, we spent 2 years preparing the battlefield for follow-on forces, which is a military expression. But we spent 2 years preparing the market and building brand recognition and building trust and building relationships, that now that we're actually launching and like literally starting to upscale now, we're literally DMing all of these people and being like, hey, we're ready to go. Can you introduce us to one person who's running a horse show? Can you introduce us to one person who's running an event, or like 5 people? And they're all like, absolutely. And then, like, the next minute we've got 5 warm email introductions where they're like, hey, Sam, meet Jody. I've told her what you guys are doing and how much you guys are going to transform the world and solve all our problems. Like, Jody, meet Sam. I really think you should use this software. It's amazing, blah, blah, blah. So it's basically now coming to fruition. 2 years of
Wow.
work of like grassroots marketing has cut to a point of like, we have the trust, we have the brand, we have the relationships. Now let's convert them into actual sales.
Wow. Wow. I mean, this is almost like the ideal way to build a product, right? Especially if you initially bootstrap, right? It's like 2 years of, getting warm leads almost, and then releasing the product. Of course, the issue could be that, as you say, right, like a lot of things break with the product, and that might actually cause maybe some loss of trust initially,
Yeah.
right? But also maybe you've been building all this time a product which, in hindsight, but I guess like while you were building the product, a lot of the feedback you were getting from the people you were interviewing, yeah, you were basically giving that feedback to your technical team, right? So that the technical team really knew that they're actually building a product which is needed, right?
Yeah, exactly. And
Mm-hmm.
we did it. The way we did it was when we like actually soft launched the tech, right? We didn't do a big loud launch. Everyone come use it, right? We did a soft
Yeah.
launch. We just basically changed refreshed the website to say like, log in now, like start now.
Mm-hmm.
Um,
Mm-hmm.
but we actively reached out to a few horse shows, onboarded a few customers across different types of events, ran those horse shows, and then figured out all the bugs and fixed them. And because we did it that way, we're now at a point where we're like, okay, we now believe that we can actually run horse shows successfully and
Mm-hmm.
scale this. Then we actually
Mm-hmm.
pulled the trigger on all the warm relationships we had. But we didn't at first. We took that first step of, let's just get our few horse shows ourselves. Let's figure out why this works. If they have such a bad experience that they're like, I'm not using you guys, like, that's okay. It's not the end of the world. We got what we needed out of it, and at the end of the day too, like, if we do our job right and we take their feedback and we improve the system and it becomes the best system in the world, we'll get those customers back. It might take them 6 months to have another crack, or see other horse shows
Mm-hmm.
using us and be like, okay, it seems to be working now. I'll go back and have another try. But that's business. You've got to, you're going to lose a few customers and have to win them back, because nothing goes to plan immediately.
Mm-hmm. Mm-hmm. There is an app, and I'm not sure it's a unicorn already, but it's definitely on track to be a unicorn. It's called Platonic,
Yep.
and it's basically really popular. It initially was in the paddle industry, and then it kind of expanded into like lots of different other racket sports. And I think now it does like a bunch of other sports as well. And actually, the way these guys grew was they initially developed their own software, but to accelerate the growth, they were actually acquiring a lot of small software companies,
Mm.
who were maybe just behind like a few courts, right? So maybe like, I don't know, like a club in Spain had 20 courts, and then they had their in-house booking system. So these guys basically did like more than 30 acquisitions.
Yeah.
Have you kind of thought of doing maybe that? Because I'm sure in the equestrian space, there are probably some established software companies, like they might look like shit, which is great, right? So you
Yeah.
acquire them, get the user base, and then obviously launch it on your nice kind of
Yeah. Yeah. Yeah.
UX UI platform.
So yeah, the short answer is yeah, we've thought about that a lot, and we've looked into it, and we've done our public audit of these legacy systems, and we've poked around and figured out, are these ones willing to sell? Are they not willing to sell? Who's the owner? What are they like? What's their temperament? What's their attitude?
Mm-hmm.
What do they want in life? Are they looking to retire, or is this like their whole identity and therefore like they don't want to retire? Um, and if we were to buy them, how much would we buy them for? If we bought them, how many shows would we get? So we've looked into all of that, and the answer is that we just don't have the bandwidth right now to pursue it, and that's either in the manpower as well as the capital. So if I went out tomorrow, where's a $10 million Series A, $10 million, like a $50 million valuation, like I'd be hiring like one full-time M&A weapon, and I'd be like, this is your job. Roll up 10 of these companies in a year, and don't use our capital to do it. Go get the loans. You know how to do that. Like, let's do this. But at the moment, I don't have enough people to do that, so I would have to do it as a CEO. And while you would argue that is a very, very good use of my time, I'm also like designing product. I'm also doing customer service. I'm also trying to raise venture capital, so that we can continue to pay the engineers to build what we need to build. So it's one of those things I just wish I could clone myself and go do it, but we can't at the moment. The good news is that the risk, if you think about M&A as a strategy, right? The risk you run is, well, there's a few reasons to do it. Reason one is go to market strategy, acquire the market, turn them off, transfer the entire market to your platform. Good as gold, lots of money, rapid traction, great. That's one great reason to do it. The second great reason to do it is that it takes them off the chessboard for someone else to buy. So it's a defensive strategy. Yeah. If I buy them, someone else can't buy them, which means that they can't get rapid traction and compete with me. So that's another reason why we'd be interested in doing it, is from a defensive position. But the good news is that because we have invested a lot in building our brand and building our thought leadership and having a very beautiful product and being very overt about the fact that like we are going to be the best event management system in the world bar none, it creates a dilemma for any competitor or any investor in any competitor. So a competitor's got to look at us and be like, am I actually going to beat these people? An investor who's looking at a competitor goes, do I think if I invest in these people that they're going to go beat Pegasus? Or, is this a fool's errand because like maybe I should just go invest in Pegasus instead. Maybe they're going to win, right? Maybe they're going to be the ones who win the market. And so our hedge against not being the company that goes and buys all these companies right now is just being the best goddamn company at what we do in the world and having the best customer service in the world in a way that like, yeah, someone can go buy one of these legacy systems, but good luck. Like it's not a guaranteed success. And if you buy them, you're going to have to compete with us, and we're not, hitting the brakes anytime soon.
Makes sense. So let me ask you another question very briefly, which is, it's been 2 years, right? And of course, you get venture debt to roll up, other software companies if you want to, but as you explained, you don't actually need to, to do it right now. But in terms of like your first 2 years, so did you like bootstrap initially, completely, and maybe, I don't know, like 6 months ago, you said, hey, let's raise some angel or VC money, or what was the history?
Yeah. So we started the company 4 years ago, and for the first 2 years, we bootstrapped it. And by bootstrap it, I mean that Jen worked, still had a full time job, and so she worked part time for them and part time for Pegasus. And she had a good enough salary that we used that excess money to basically mean that I didn't have to work. And we put a little bit of that towards paying developers as well as me doing a lot of the development myself. Um, Once we decided to pivot from what was product one into version two of Pegasus, we went out and we raised a family and friends round, which we have used to build the software to date. And then we opened a seed round about a year ago. And that seed round, we've still got some allocation available in it that we are actively looking for investors at the moment to fill that out. But we've filled half of it. And that half has come in as they've signed the term sheet. So we've been spending that money so far. But
No.
considering, if you look at, unless you have a technical co-founder who doesn't have a job, considering the size of the pie that we're trying to eat here, which is running horse shows from professional all the way down to amateur backyard events, like top to bottom, and then 54 disciplines left to right across the entire market. And considering how much is built into it, like to put it in perspective, like we can't use DocuSign because it's too expensive. So we built our own DocuSign into the software natively, right? So like there's a lot of development there. Considering all of that and considering how much you need to build before you can even get users using it. And then once you get users using it, you don't make money until their horse show finishes. And a lot of horse shows are planned months in advance. So they're like, we can onboard a customer today. And they're like, I love it. I'm going to use it. I've got a horse show in December. It's like, great. So you need to have enough money in the war chest to not only develop it all and get it to market, but then you need to have enough money in the war chest that you can deal with that inherent time delay because you're dealing with live events.
Right.
And so I doing something like this without raising venture capital and doing it well and doing it at scale would be really, really hard.
Cool. No, that's really an interesting point. Yeah. Awesome. So let's maybe go towards the end of the podcast, and I usually ask a few questions. I guess given that you've been a founder before of a SaaS company, and now you're doing it again. What are the critical lessons you've learned as a founder you would love to share with other founders in the SaaS industry or tech industry?
Critical lessons. Um, here's a relatively one that's quite unique to me, and a lot of and I think increasingly in this day and age, a lot of people are starting companies as couples because whether it's if you're doing like the San Francisco venture backed SaaS thing, or AI project, like it's usually majoritively like dudes with another dude co-founder who they met through some accelerator. But for the majority of people starting who can call themselves entrepreneurs these days, they're starting like an online e-commerce store, or they are building an online course, or they've got like an influencer page and they sell like mastermind retreats and all that sort of stuff, right? A lot of those businesses are couples because they get into it. The couples, they go in the car and they listen to the same entrepreneurial podcast and they go, we should start something. Maybe we can do this. And then they decide to do it together. And that way they're all in on it because they're both invested in it. So my comments on the couple thing is that it's excellent because you're both all in. So if you're not like my last company, one of my co-founders had a long-term girlfriend. We started the company, and the company was stressful. More stressful was his relationship with his partner because she didn't understand business. She wasn't in it, and she was annoyed that he was working all the time. So he would come to work stressed. He'd go home and he'd get stressed because he was constantly trying to have to rationalize why he can't go out to the girlfriend's barbecue on a Sunday afternoon because he should be in the office working, right? So starting a business as a founder with your partner, you're both all in. You both inherently understand the sacrifices you're going to make. There's no rationalizing anything. The downside is you're both all in. So if it's not working, you're fucked. So like if you don't have like a nest egg, a financial nest egg, then you're both highly stressed about the fact that like, wow, maybe we can't pay rent next month, or or you're both financially stressed, and therefore like relationship stresses become more heightened. Like there's a direct correlation with Jen and I. Like when we're having like some big fights that aren't related to the business, we're like, oh, we know that this is because we're stressed about the company right now. Like we're taking it out on each other, but this has got to do with the company. This hasn't got to do with us. But at the same time, so I would say that if you're thinking about starting a company, with your partner, it's excellent. And ultimately, if I had to say like net, it's positive, like very, very positive. Like it's definitely way more positive than negative. And so don't hesitate to do it if you're thinking about it and you're thinking about a co-founder. That's one thing I would say. Actually, the other thing I would say on that too is that if you're going down the venture capital path, like, and you're a couple, like every venture capitalist is going to look at you and they're going to think to themselves, they won't say it to your face, but they'll say it behind your back when you leave. They'll say, the biggest risk in this entire deal is them. They're a couple. What happens if they break up and they've got 50-50? So does 50% of the equity just walk out the door jaded and angry and doesn't want their partner who they broke up with to succeed? Or are they mature, and even if they break up, they understand that financially it's in their best interest for the company to succeed, so they'll continue to play ball and they'll continue to do what's best for the company, because even though they're no longer together, they financially succeed as a result. So and there are a lot of venture capital funds out there that will just not invest in couples. It's a standing rule. Like we've got so many deals to consider. Why? Let's just take them that 50% off the table immediately. It's a risk we don't need to deal with. So, and if you are in this position where you are a couple, like it's in your interest when you're speaking to VCs to tell them this. Like don't beat it around the bush. Be like, yeah, like we understand. Like we are one of the biggest risks, if not the biggest risk in this deal. This is how we think about it. We are mature. This is how we've structured the company to accommodate it. This is what we're going to do in the event that this doesn't work out for whatever reason. This is how we'll respond. This is what we expected of each other. And this is what we think is the right thing to do on behalf of our investors. So at least they're like, okay, they're mature. They've got a plan. They too understand the elephant in the room, and they're going to deal with it accordingly.
Makes sense. Yeah, when I ran VC for the family office, we actually also had a rule to not invest in couples, and not into basically relatives, like brother and a sister and all this kind of stuff. So but yeah, having said that, there are actually a lot of really good examples with couples being very successful. So
because the benefit right is that Jen and I, we are on 24/7. It's actually a problem to the point that like we have to be like, we need to make sure that we don't talk about business, because we have to have a relationship outside of the company, right? But the reality is every time we drive somewhere, we're listening to a podcast, and we'll listen to like the My First Million podcast. They'll make a point and we're like, pause, and we'll discuss it. And we'll be like, this is what we should be doing in our company. Maybe we can do this. Let's figure this. Blah, blah, blah. Like it's just very like the two founders are with each other and they are planning, adjusting, and that feedback loop and that decision-making cycle is so much faster than having to wait till you get into the office tomorrow and then convincing someone who wasn't there when the idea came up that your idea is a good idea. And like so there's a huge benefit to it if the two people are mature enough to be able to manage it effectively.
Absolutely. All right. So if people want to, get in touch with you, or, investors want to reach out, where can they find you?
So the company is called Pegasus. The website is thepegasus.app. So www.thepegasus.app, and then same thing. So if you go on Instagram, the Pegasus app is basically the name. And that's our handle, the Pegasus app on Instagram. And then, just go to our website, reach out to me directly if you want. My email is sam@thepegasus.app. But at this point, if you run horse shows and you want to run the best goddamn horse show in your life, reach out to me. If you're an investor and your daughter rides or your wife rides and you know how much money you spend on horse shows and you know that there's a lot of opportunity there, reach out to me because I'd love to chat to you.
Awesome. Yeah, you heard it here first. So thank you so much. Thank you so much. All right.
No problems, man. Thanks for having us.
Bye. To finish off this episode, a little promotion from our end. Neoptima is an award-winning marketing agency for B2B SaaS businesses. We work with companies backed by YC, Sequoia, Carlyle, Lightspeed Ventures, Northzone, and many other top VCs and PE investors. We work with venture-backed, private equity-owned, and bootstrapped SaaS businesses all around the world. Reach out to us and book a call in the description below so we can optimize your growth journey. If you have a fellow founder, if you have a team member, if you are part of a Slack group, Telegram, or WhatsApp group with other founders that could get value from this episode, please share this episode with them. We want to help as many founders as possible to scale their business. Thank you for joining us on this journey. See you in the next episode.